how are you? So excited to be here today and have this year's theme be bridging the gap between Web 2 and Web 3, which is something that I'm very passionate about and spend all of my time doing. At Surge, we started 6 months ago. We are a female-led organization focused on educating and onboarding women to crypto. We operate as creators of easily digestible educational content, and we have a community for women to go through their crypto journey together. We're launching an NFT that will be a membership to an enhanced ecosystem of opportunities and perks across Web3, meant to give women skin in the game. Super excited to have our 3 badass panelists here with us today. We have Medha Kothari from Variant Fund. We have Maitree Mervana from Acrew Capital. And Lydia Hylton from Bain Capital Crypto. Hi guys, thank you so much for being here today. Would love to start by having each of our panelists tell us a little bit about themselves. Let's start with Medha.
Hey y'all, wait, can you guys hear me?
Yeah.
Yes, okay, cool. So I'm Medha, I'm a research partner at Variant. We're a crypto native venture fund focused around the ownership economy thesis, which I can go into later if you guys are interested. Before that, I've been a software engineer in the crypto space since about 2016, 2017, jumping around a lot of different early projects until I fell into the Celo ecosystem. So I don't know if you guys are familiar with that, but it's basically like a layer 1 Ethereum competitor. And I was kind of working on the dev tooling side. So worked on a lot of like smart contract SDKs, validator CLIs, basically anything that would help a developer build on top of our smart contract platform. And then on evenings and weekends, I also run a nonprofit called She256, which I started in 2018, and it aims to increase diversity in this space. So I've been doing a lot of work around like mentorship initiatives, educational content, community building, and then most recently we spun out an investment DAO called Komorebi, which invests seed capital into female and non-binary run crypto companies, crypto founders. Yeah, I'll hand it over to you.
Awesome. Hi, everyone. I'm Maitree Mervana. I am a principal at Acrew Capital. We are a multi-stage venture firm. We launched a couple years ago as a spinoff of a prior venture firm, and we are what in this world a more institutional venture fund, although we've been investing in the crypto space for nearly 6 years. I help lead our investing at the intersection of crypto and consumer, and have been with the firm since the firm was founded. Prior to Acrew, I was at another venture firm. I helped launch T-Mobile's venture arm, and then prior to that, spent a few years in investment banking. So really excited to be here today. I'll pass it on to you.
Hi, I'm Lydia. I'm a partner at Bain Capital Crypto. I actually joined about a month ago. Bain Capital Crypto is a new fund focused specifically on crypto, particularly protocol investments. And we spun out of Bain Capital Ventures officially about 5 or 6 weeks ago, so a new fund, but part of the broader Bain Capital ecosystem. Prior to Bain Capital, I was leading the crypto efforts at Redpoint Ventures, a traditional venture fund. And prior to that, have had a few different professional lives. I spent some time in software engineering. I was a consultant for a while before I got into crypto. So that's me.
Amazing. Yeah. So excited to have all of you guys here. So let's dive into it. Would love to hear how each of you defines your investing strategy and what are your principal guidelines?
Who should start?
Who'd like to go first?
Yeah, I guess I can start for this one. Well, I can go a little bit into my fund's thesis. So I mentioned the ownership economy before. That basically just means that we think that all internet era services, protocols, products, all of the above should be first and foremost owned by their users. So a lot of kind of if you're thinking about Web 2 social media companies, they were all about like user-generated content, which is awesome. That's a great step in the right direction, but we think it should go further, and Web3 is all about now users owning that content that they create. And this doesn't just have to do with consumer startups. It could be anything from like DeFi to infrastructure to any of that. So with that in mind, we're a pretty like crypto generalist fund, so we invest across every vertical in crypto. In terms of my investment thesis, I'm personally really excited about infrastructure companies as well as consumer crypto companies. Just because of my experience as a software engineer, I feel like there's just so much lacking when it comes to developer experience in crypto. Like if any of you guys have tried to like, I don't know, launch a smart contract or like build on any existing like L1, it's just, the experience isn't super smooth, and neither is the user experience on existing consumer apps. So that's something I'm passionate about. And yeah, I can go deeper into like some investments that we've made that kind of showcase this. I think the premier example is Uniswap. So Uniswap is basically a decentralized exchange. It lets you exchange from one cryptocurrency to another, but it's cool because it kind of competes with centralized exchanges, like if you've heard of Coinbase. And I think it's the pinnacle of the ownership economy thesis, where if Coinbase has a take rate on these like exchanges, all that money is going to Coinbase, the company, versus in Uniswap, that money, if they ever choose to take a fee, goes to the protocol itself, which is then governed by anyone who owns the Uni token. And so this is like, I think, a really good use case for why like decentralization can lead to like more, I guess like the users owning the protocol. Yeah, so that's me. I don't know if you guys.
Yeah, I'm happy to go next. So we're extremely thesis-driven investors at Acrew. We have sort of 4 large thematic areas ranging from security and fintech to community and data. And within each of those thematic areas, we generally are iterating and creating new theses within each of those kind of broader thematic areas. I think I mentioned earlier, I help lead our investing within our community thesis, and within that, you know, I think one of the things that excites me the most about Web3, and especially the intersection, is that there's a lot more alignment between communities, and I think that a lot of the investing that we've been doing has been to promote that shared incentive across community members and platforms, and then in addition to that, I think one of the things that I think a lot about is, you know, obviously we're very early from an adoption perspective, so thinking about the ways that we can on-ramp more users into the crypto ecosystem, so that, you know, comes in a variety of different formats. One of the ways that, you know, from a thesis perspective that we've been thinking a lot about at Acrew is that, you know, crypto should meet users where they are, and so that's kind of driven a few of our investments, one of which is a company called Lolly, which is a crypto rewards platform. It's kind of like Honey. It sits in your browser, and every time you shop, you can earn some Bitcoin to start. And for us, you know, obviously we were excited about that business from a product and opportunity perspective, but from a thesis perspective, it really fit within that kind of overall construct where we were thinking about what are the ways in which we can introduce crypto in a very seamless, frictionless way for consumers. And so that's why, you know, that's one example of an investment we made about a year ago that falls into that theme.
Yeah, I mean, I think a lot of great points made here already. I think, you know, the ultimate sweet spot for an investor is the overlap between a team that you're really excited about and a market that you're really excited about. And I think you can approach this either way. I've seen successful investors who follow really smart people or who are more thesis driven and develop some sort of hypothesis for what the future is going to look like and what we need to do to get there. We definitely fall into that latter category, also more thesis driven. My personal area of coverage is NFTs, DAOs, consumer, gaming, kind of anything outside of DeFi and infrastructure tends to fall into my purview. And so I like to take an approach of go deep on a specific area that I'm excited about, that I see a lot of energy in, meet all the companies in that space, ultimately come to some sort of conclusion about who's going to win, and then ideally make an investment on the heels of that. But I think a lot of people have a more people-first approach, and that's certainly very interesting as well.
Yeah, I love that. And I think with crypto, what tends to happen is you have a niche part of it that you love, and you go down a specific rabbit hole that you fall into. For me, that was probably NFTs when I became really interested. How many people here own an NFT? Wow, probably a lot more people than who would have said yes a year ago. Would love to know what area of Web3 excites each of you the most.
Happy to go first. So I think it's speaking about NFTs because I think that's an area that gets me the most excited. I think like I was talking about communities being a driving force of a lot of the investing that I do. I think NFTs have really manifested as a mechanism to drive that incentivization and community amongst artists and audiences and fans. And so I spend a lot of time and get really excited about NFT creation platforms, utility-driven NFT platforms, DAOs that have a social orientation, as well as gaming, like Lydia mentioned as well. So anything that really kind of intersects crypto and community is where I get the most excited.
Speaking of, can't be a consumer investor and not talk about NFTs. What I'm really interested in right now is kind of this notion of adding utility to NFTs. I think right now a lot of the NFT projects are ultimately going to be depreciating assets because there's always a new NFT project coming out, and so behave like a car. You drive it off the lot and it loses 20% of its value in a certain amount of time. But then there's a lot that you can do around an NFT project that creates utility, and I think gaming is the really obvious use case. There's a lot of people experimenting in music and sports and a lot of other areas to continue to add value. I think Yuga Labs is a perfect example of adding value around the Bored Ape collection to kind of fight this notion of a depreciating asset. So I'm really interested in the utility side of NFTs right now.
Yeah, I couldn't agree more. I think the utilities that we're now starting to see manifest in NFTs and the communities forming around them is becoming a lot more interesting than the art, because there's amazing art out there with NFTs, but we've kind of seen every project and every derivative, and now it's really about users want to see what will I get as a user and what utility and how do I believe in this project long term. So it's really exciting to watch that happening.
Yeah, totally. I guess I'll talk about two things. One, obviously NFTs, since we've all talked about it. Specifically, I'm really excited about CC0 projects. So if you aren't familiar, CC0 is a Creative Commons license. It's not crypto specific at all. It's the idea that an artist or content creator can give up their work to the public domain, basically open sourcing their content or art or whatever, and letting anyone use it for commercial rights, for any sort of remixability, you can do anything with it. And we're seeing this really take off with certain NFT communities. So there's a community called Nouns DAO. They basically are a generative NFT art project where every week a new Nouns gets released and is auctioned off. And they've gone from anywhere between 30 to 100 ETH, which is a lot of money. And a lot of that money that when you purchase it goes towards this DAO treasury, which anyone who holds a noun can then control. And right now that treasury is worth 17,000 ETH or something ridiculous, which depending on the price of ETH is above $50 million. And there's only 200 or so nouns holders or NFT holders right now. And they're able to basically use that protocol treasury for whatever they want to do. But what's exciting is that the art itself, so the little nouns images, I wish I could show you a picture of them. You should look them up. They're really quirky and cute. You can, anyone, any of us, even if we don't own a noun, can do anything with it. And the idea is that even though it's public domain, the value eventually accrues back to the original NFT and the NFT community and holders. And you're kind of seeing this play out because the market has clearly deemed them valuable if the treasury is worth this much. And it's definitely an experiment. I'm excited to see what comes out with it, but my thesis is that I think CC0 communities have more network effects and basically can sustain more engaged communities of developers and artists and all of those stakeholders because of the way the business model works. And I think it kind of flips the normal business model of art and content on its head. And then on the flip side, non-NFT stuff, infrastructure, since that's my specialty, I'm really excited about scaling protocols. So we're finally at this like critical moment in crypto where so many new people are coming in. Like this entire conference is about this now, like that says something. And because of that, a lot of the layer 1 chains are having huge issues with scaling. So you guys have probably heard of like really expensive gas fees or just like transactions not going through or taking forever to get through. And that's all because of scaling. But there's a million people working on this right now. And specifically there's projects working on optimistic rollups and zero-knowledge rollups, which I won't go into deeper right now, but if you're interested, I would definitely look into them. They're a really interesting technology that lets you basically absorb the security model of Ethereum. So it lets you like take security from Ethereum's network or whatever layer 1 you use, but allows you to scale transactions so that you can do things much faster and much more cheaply. And I think this will affect everything, like especially the NFT industry. Yeah.
Super interesting. What hurdles do you guys think crypto needs to overcome in order to truly reach mainstream adoption?
I mean, I think that we were just talking about a few of them. I think to me, mainstream adoption means users with non-custodial wallets who are, actively trading or actively participating in communities. I think it's a step further than a Coinbase account. And I think that the main barriers that I see right now are gas fees, user experience challenges, complication around like a multi-chain system right now. And so I think there are a lot of different ways, a lot of different solutions. We haven't seen how that will resolve yet. But yeah, largely I think it's really a user experience issue in my opinion.
Yeah, I think just to add on to that, I think that that's 100% true. And I think about it in like 3 big buckets. I think that there's an accessibility issue. I think that there's an education gap. And then I think that, I think the design and sort of UX piece of it. So from an accessibility perspective, I think that there's a lot of exciting projects. Medha was talking about a few of them just from an infrastructure perspective that are creating more seamless ways to access crypto, use crypto, and again, just meeting users where they are. So I think that there's sort of a big opportunity in just creating more accessibility for users. I think education is one of the things that it's been exciting to see that a lot of projects are embedding that within their product experiences, because I think that, frankly, I mean, we're super early in the adoption cycle, and I think that there is a big opportunity to educate and provide kind of guidance to users. And so I think that that's another piece. And then design and UX, as Lydia laid out. And I think a lot of them, kind of work in tandem. So I think that I get really excited about projects that are prioritizing those 3 things, because obviously as a consumer investor, I'm thinking about like, how do we get crypto into the next 100 million users, if not more. And so those are the 3 things I'm typically looking for and prioritizing in projects that I get excited about.
Yeah.
I would just add regulatory uncertainty.
Yeah.
I was going to say, yeah. I think you guys all made really good points. Definitely agree on the user experience part. I think ideally we wouldn't need seed phrases. So if you guys, I mean, it seems like all of you guys have bought NFTs. You guys probably had to interact with some sort of a wallet. And usually that would entail memorizing like a 12 to 24 word seed phrase, and that's just terrible UX. Like, that's not how we can function. There's a lot of people working on really cool ways to like ensure security while also maintaining usability, and I think that's going to be super interesting. So any sort of like sharding of keys where you can like basically split apart your keys and put them in different places so that you can have more security, but you don't have to like necessarily memorize these numbers, and like if these words go away, then you like lose all your funds. Like, that's a terrible UX. But you also don't want to give control to all your funds to like a Coinbase. I mean, maybe you do, but I don't want to. And so I think we need like a intermediary solution, and so I'm excited about projects that are doing that. Also, like you mentioned, like regulatory concern. Like, I think as the tech, as I guess DC catches up to the tech, there's a lot more regulation that's going to come in the next like 5 to 10 years. And I just want to make sure that that doesn't like stifle innovation. I think the latest executive order that came out of DC was really promising. I thought it was like really exciting and optimistic. It like called for a lot of research into this technology and basically like was a call for innovation, which was exciting. And I hope that's the path that the U.S. continues to go towards. But yeah, that's another concern. I would say one more thing is around, I guess, like realizing the actual vision of DeFi. So like decentralized finance as a concept was created to be like an open new monetary system, right? Like we don't want to repeat the mistakes that we made like hundreds of years ago when designing our current system. We don't want to make the people who are already wealthy now just more wealthy and creating a wider economic gap. And so I want to make sure people working on these protocols and systems are thinking about that, because I am worried a little bit about the way DeFi is headed. And I want to make sure that the initial promise of like DeFi being a place where when people were locked out of their home financial institutions, they could come to DeFi. I hope that stays true. And I know in America, like we're really lucky and have a relatively stable currency and relatively like low inflation rates, maybe not right now, but I think other parts of the world definitely don't have that, and that's where crypto and like just like digital finance in general can come into play. I want to see that be worked on more actively and see what happens there. Yeah.
Yeah, that's a great answer. And I think that question is something we spend a lot of time thinking about at Surge, because the language around crypto is still so intimidating, which often discourages a lot of newcomers from entering the space. We try to be very mindful of beginner inclusion because natives forget what it was like to enter the space in the first place and start using the crypto lingo and the jargon that to an outsider just feels like a gated community. And so I think unlocking the next tier of mainstream adoption lies in making a simpler and more accessible entry point to Web3.
Can I just add?
Yeah, for sure.
On the word crypto native, I think is even a challenging one, because it creates this dichotomy between those who know crypto and those who don't. And I think that will go away over time as crypto becomes more mainstream. But I think that when I was getting into the space, that word was one that intimidated me a lot.
Yeah, it's either that or newbie. And there's kind of no in between.
Yeah.
And this next question, I would love to hear, especially from Acrew. How are traditional funds adjusting their strategy accordingly to fit crypto startups, because they just have such a different set of needs?
Yeah, I think it's a really good question, and I think that it's top of mind for a lot of funds. I think, fortunately for us, we've been investing in the crypto space for almost 6 years now, so we've kind of evolved over the last few years, especially as there's been a lot more innovation, especially over the last 2 years plus. But I think it really comes down to understanding the ecosystem intimately, and I think especially within Web3, if you're not participating and you're not an active contributor, it's really hard to learn about like what are the net new opportunities that we can support to bring this ecosystem forward. So I think our entire team is very in the weeds. We're minting NFTs, we're contributing to DAOs, doing everything kind of in between. And I think those things are really important, especially from a somewhat traditional fund, to spend time doing that, because if we don't understand the ecosystem and aren't a contributor to the ecosystem, it's really hard, again, to support the projects that we invest in meaningfully. And so I think that that's like been the first and foremost step. And then beyond that, I mean, I think that being a capital partner means something very different to startups in the Web3 space. And so I think to your original question, there's a different set of needs. I think on one perspective, flexibility from your capital partner, right? Like I don't think all startups today want a fund that's going to take the whole round. They want to have participants across the ecosystem to support them on their journeys. And so I think there's a flexibility component as it relates to our investment strategy that we've evolved over time. I think that there's an evolution of what governance means and how we get involved from that perspective. Obviously back in the day, we would take a board seat and we'd do all these different things, which is not really the case for a lot of the Web3 projects that we're backing these days. So I think that model of governance and how we get involved and how we support has evolved over time as well. And then, I think just keeping our pulse on what's happening in the ecosystem. I think that there's a lot of exciting innovation that is happening every single day. And I think being a part of that ecosystem and part of those discussions is important now more than ever, because I think to the last question, which is what are the hurdles that we foresee to get mainstream adoption, I think that we as capital partners can play a really strong role in having a voice and putting our dollars to support some of those causes. So I think those are some of the different ways that we've been going about it.
Yeah. Would you guys like to add anything?
Yeah, I think you made a really good point about like what capital means to Web3 founders, like especially these days where capital is everywhere. I think it's really forcing like venture funds as well as like venture DAOs to start really thinking about what it means to help these portfolio companies. And so a lot of times we find ourselves being like key stakeholders in, like you mentioned, like governance, like we're putting out proposals, we're like trying to figure out where like treasury funds should be like vested into. And I think like taking a more active approach is kind of like what all Web3 companies want. And I think another interesting thing is like exit to community. Like this is a concept that I feel like most Web2 funds are not thinking about, because like what does that mean, right? Exit to community just means like I guess like IPO. But for a Web3 company, exit to community means like fully open sourcing, decentralizing, potentially giving away tokens to your users and in the open market. And I think that's like a really interesting like business model shift that funds have to really think about, especially when they're like allocating capital to these protocols.
Yeah, it's interesting having each of your perspectives here, because you're each in three different types of funds. We have Variant, that's solely crypto native, and then Bain Capital that just spun out a crypto fund, and then Acrew that's a generalist fund but now investing in crypto. So it's great to hear each of your perspectives on that. And this next question is a more female-focused question. In 2021, female founders only secured 2.3% of venture capital. Why do you guys think this is?
There's like so many different reasons. I could like go off. Maybe we should just like
I know.
riff off.
Like, I don't know.
Because, like, I don't know if I want to open this can of worms.
Yeah.
Yeah, maybe we can just riff off and just list things. But I think one of the biggest ones is honestly just like disparities and unconscious biases like in the pitch room. So I think like a lot of the qualities we look for, or traditionally we as in like the world looks for in leaders, are one, taken differently if like a woman expresses those same traits, and two, are also like not necessarily what is needed for like a really successful company, and yet we still like latch onto them as like, okay, this is like the recipe for the perfect founder. And so when a founder doesn't meet that, you're inclined to like pass, maybe, or not give them the benefit of the doubt. Another thing is just like network and connections, especially in crypto. I mean, the reason why I started Sheet 256 was because in 2017 when I joined crypto, there were like very few women there. I mean, it's gotten a lot better, but there's still a long ways to go. And a big part of it was just like my female friend circles weren't talking about this. And so we weren't able to like get as far. Like we weren't talking about our investments. I think in a lot of, I wonder if you guys can empathize, but I feel like in a lot of my female friend groups, it's almost like taboo to talk about like wealth generation, wealth creation, investments, just personal finance in general. And so that, like, let alone crypto, like we didn't talk about any of that. So I feel like it's super important to have a community of people that you can go to and like ask questions to, learn about things from, invest together. And that lack of community is, I think, what creates a huge gap in exposure to crypto. So I think top of the funnel, there's a lot of issues, as well as like once you're in the space, there's a lot of disparities around like getting funding.
Yeah, I think it's super interesting, and it's just mind-boggling that the stat has been the same for a few years, despite all the different activities that people are doing. But I think, as Medha said, right, like I think that there's a top-of-funnel problem, which is like closed networks that have kind of really enforced and enabled a lot of the innovation that we've seen over the course of the last few decades. And I think it's great organizations like Surge and Sheet 256 and others that are supporting and creating these communities where women can come together and support and empower each other. At the same time, I think that from a capital perspective, right, and kind of these biases that do exist in the pitch rooms, like I think that one of the things that is also unfortunate is that less than 20% of check writers at venture capital firms are female, and that is another big issue that I think that there are organizations like Allraise and others that are supporting bringing women through the ranks within venture capital and bringing more women in check writing roles within different firms. And I think that, I think that is one step in the right direction, but at the same time, I think that there are inherent biases that Medha has laid out that really just need to be called out for what they are during these pitch meetings. And I think what's fortunate is that there is a little bit more visibility and conversation, but as we bring more check writers that are female and we bring more support and community for female founders, I'm hoping that we'll be able to kind of bring that percentage much higher and where it needs to be. And I think like one of the things what you brought up, Medha, on sort of communities of women being hesitant to talk about wealth creation, and that's something that I've observed quite well, and it's something that at Acrew that we think pretty deeply about. And for us, one of our funds, we call it the Diversified Capital Fund. It's our growth fund. It was very much to combat that same issue, and we wanted to create more wealth creation opportunities for diverse individuals, women, people of color, et cetera. And one of the things about venture capital is, it is a really closed network. I don't know how many people in this room have ever had the opportunity to invest in a venture fund. It's pretty hard to be able to do that. And so what we did was we opened up access. Anyone could have invested in our fund. We waived minimum check sizes. And that really enabled us to build this community of diverse operators, executives, et cetera, that are now now part of the capital that we're deploying into these businesses and creating more diversification on cap tables. And I think that that's another important factor into bringing this whole ecosystem forward as well.
That's amazing. How many people did you allow to come in that way?
Yeah, we have nearly 500 individuals that have been a part of our community at this point. I think about 60% of them invested. 70% of the capital is from diverse individuals or diverse-led institutions. So it's something that we think really deeply about. We were really intentional in making sure we were getting to all avenues to open up this opportunity, and we're really excited. It's our first one. We're going to raise again, I'm sure, and so I think it's hopefully a step in the right direction.
That's amazing.
Yeah, I think this is an issue. Bain Capital Crypto, I think, has had a number of, we've been tied to this issue a fair amount recently, and I would say that it's really important that, to both your points, that we as investors acknowledge our role in this, and that we're proactive about building diverse teams, because diverse teams invest in diverse teams, and I think it's tough if you have investors who kind of take a passive approach. It really needs to be an active thing, and it's something that we're thinking about really, really carefully right now.
Yeah, and I think another thing is that I want to emphasize it's not at all about lowering the bar. There are so many, so many women and non-binary folks and just underrepresented minorities who are fully capable, if not more capable than the average man, to run a really successful business. It's all about equal opportunity. Because sometimes I feel I don't know, I'm definitely in the mix. I'm fully just talking here, and I haven't prepared this, but I run a nonprofit focused on diversity, but sometimes I'm torn, right? I think sometimes putting the focus on diverse individuals, whatever that means, can sometimes also be ostracizing and make it feel like they're not equal. And I think the emphasis should be on equal opportunities. Like, people should be given the same opportunities to succeed. Like, people just, like, a lot of white men casually just have mentors that they can go to build successful businesses, right? And especially in the pre-seed and seed stages, you're not really looking at the product, you're not looking at the market, you're looking at the person, you're looking at the team, you're looking at past companies they worked at, you're looking at institutions they went to. So it really comes down to like the levels of adversity people face in all stages of their life, right? Like the school you go to, the first job you have out of college, all of that matters, especially when you're starting a business. So it's important to realize that it's fully merit-based, but the way funding is given out is not merit-based. It's not about your product. And that's something we as investors have to think a lot about as well. So I think it's important that we're building teams that are more diverse. But yeah, I think it's important not to like tokenize people. Like sometimes I wonder like why is it women of Web3, like we're all just in Web3, right? Like why does that have to be highlighted? I'm just an investor. I don't know, it's interesting. I see both sides, but yeah.
Yeah, I love that. And I love what you guys are doing at She 256, which for whoever doesn't know, She 256, they pair women entering crypto with mentors. And I actually was very inspired by you guys before starting Surge.
Oh, thank you.
I think a lot of people really respect and love what you're doing there.
Thank you so much.
And we don't have that much time left, but I want to ask a fun question. What would each of you, if you could start with a clean slate today and create a company, what would it be?
My dream job has always been to be a myth buster. I don't know if you guys know that. No. That's not really a business. Maybe if I want to do something dog related, like an NFT collection competing with the Kennel Club would be fun.
Oh yeah.
Yeah.
You could do it.
I could. I might.
You should.
Got some buyers out here.
I mean, we're all investors for a reason. We're probably not great founders, but if I were to make a company, I would love to work on like cross-chain stuff, so like bridges, just because I feel like right now you can think of every L1 as its own like nation state, almost like its own government, its own tribe, its own culture. And I think there's so much value in like bringing them all together and being able to like interoperate between different zones, different nation states, and be able to like, like take money from Ethereum and put it into like the Cosmos ecosystem or Solana or whatever, and do that very seamlessly through one unified user experience.
That's amazing. I would probably build something in the travel space, honestly. I think that there has been a lot of attempts over the years, probably for a reason, honestly, that haven't worked. But I have been searching for the business that really builds and creates a more seamless way to plan a trip with your friends, go to different places. I think that there's probably an NFT component that I'd drive in there as well, but that's probably what I would build. But again, to Medha's point, we're investors for a reason, not founders.
And I feel like with you, I mean, She 56 is basically the company that you created. So would love to now take one or two questions for our panelists from the audience, if there are any questions.
Yeah, I haven't heard anybody talk about a crypto for good fund. Where's that?
Yeah, that is a really good question. I mean, one, what is your definition of good? Because like Komorebi, the investment DAO I started, is investing in like women and non-binary crypto founders. In a way, that's good. But if you mean more like social impact, there are a lot of people actually working on this. Climate right now has been super interesting in crypto. You guys should look up KlimaDAO, Klima. They're basically working on So basically, they take like tokenized carbon credits, so carbon credits that are brought on chain through like through this protocol called Toucan, and then ClimaDAO is creating like a market for them, and it's like really fascinating because there was such a demand for these tokens and for getting into ClimaDAO that it actually like drove up the price of like these carbon credits, which is a good thing because that meant that companies were more incentivized to just like use less carbon or like emit less carbon from the get-go so that they don't have to buy these expensive carbon credits. And whether you believe carbon credits is a good way to solve the environment issues is like up to you. Like, you know, it's not perfect, but I think that is one really good example of like mission-oriented impact. The company I used to work for, Cello, also cared a lot about the environment. We were doing interesting research into like nature-backed currencies. So like we had a stable coin, and we basically were thinking about what if we put tokenized forests or clean water into our reserves, because anything that backs currency is really valuable, right? So why don't we make those things inherently valuable? All of these are experiments, obviously, but I think it's very interesting. I think people are definitely working on it. I don't know if you guys have other examples.
Yeah, I mean, I think on the climate point and also just the Cello ecosystem holistically, there's a project called Social Stack that's building essentially a social token platform for nonprofits and other projects that are looking to make some sort of impact, and they're able to kind of reward individuals that are a part of their communities or their nonprofits for certain actions that are net positive for the world, and they can range depending on what the nonprofit is. So yeah, I think that there are a number of projects that are leveraging crypto in interesting ways to create impact, and I think that there's a really exciting opportunity for that.
I also just want to, I think it's a really fantastic question. I think there should be more in the space. I do kind of want to decouple impact investing and impact oriented projects from women's issues, because this is something we've talked about before. Like, there's this association with women and impact oriented companies and projects, and I think that that's kind of a bias that a lot of women in the space are working to overcome. So like, I think it's a really important question. I think I try to make those issues separate in my mind, like to be focused on impact or to be focused on diversity, are kind of distinct in my mind.
Yeah, and women are more likely to get funded if their organization is mission driven over profit driven, which goes back to your point.
I wish we were all like that.
Hi, Maitree. I'm Sally. Jan, we spoke here.
Nice to see you.
Yeah. And also, there's a company called Doing GUD, and they do like NFTs for so my question is, when it comes to Web3 investing, obviously there's a lot of really early on companies like pre-revenue, like taking out bets on tokens and things. So how do you think about exiting? And because obviously traditional model of and what you're trying to do for LPs is get like really outsized returns. So how do you think about exiting in Web3?
Yeah, I think that's a great question. I think a lot of it is it's unwritten, right? Like there's an unprecedented amount of dry powder in the space, and the world has yet to see like how all of this will exit. You know, I think the mission of a VC fund has stayed the same, and that is to take a patient capital approach and support founders over a 7 to 10 year journey. I think there's this trope that because it's crypto, VCs are looking for a quick exit. That actually hasn't been my experience. It's still very much a long position, and we invest intending to even hold the token through its liquid, through its launch. And so, I think there's a lot of questions to be answered there still, but it should be like a patient, long-term partnership as opposed to like a quick flip once a token goes public.
Yeah, I think it's consistent with how we've been thinking about things, and we've been investing in companies and projects for nearly a decade at this point, and I think there are still some projects that we invested in 6 years ago where we're holding the tokens today, and so I think like it comes to the role of being a capital partner for some of these projects, and I think that they are longer journeys, and I think we, again, going back to what I was saying earlier, we are very early still in terms of kind of the adoption curves across mass market, and I think that there's still a lot of opportunity, and staying in support of certain projects through those cycles I think is important. I think that it's interesting because I think projects have been taking a variety of different approaches. I think that there's a handful that have been going down a very traditional equity model, and we'll still invest in those. But those that are thinking about exiting to a community or vice versa, I think that that's just as fine of an approach, and we have kind of mechanisms in place to not only custody those tokens, but also kind of continue to be involved in governance in different ways. Yeah, but I think to Lydia's point, I think it's an evolving process, and I think there's a lot of different and new business models that are forming today, and I think as VCs, we have to continue to be nimble and evolve in our processes to support that.
Well, our time is up, but this has been so fun. Thank you guys for being here, and that was super interesting hearing all of your perspectives.
I got one more question. Because we're talking crypto. When moon? When moon?
Right now.
Anyone?
Right now.
Come on. All right. Who here is invested in crypto? That should have been funnier for you all. This was absolutely fantastic. All of you, thank you so much for being here. One more round of applause.